We'll go ahead and take a look at the tick. Yesterday we identified very early on after the open that our filter tick was below zero. We were starting to fail very quickly the first moving average, then into almost the 10 o'clock opening range. Clearing, we had already failed the second moving average. I was discussing in voice chat that I would not be looking for longs. I'd be very defensive and possibly looking for the short side, short deltas. And again, we completely failed and moved to the downside very rapidly. And then selling started to increase really into the noon hour and then picked up really into the afternoon. So make sure you're watching this at the open. Where we start at with the filter tick will be important, and then if we go above and below zero, new lows still outpacing new highs.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, October 19th. We're going to start our pre-market morning strategy session and briefing. We're going to jump right into it with the SPXP settled. SPXP settled, all expiries turned on here. We are still in a put-dominated environment above and below spot price. You'll notice a little bit wider transition, 43.25 up to 43.70. Spot price currently at the close yesterday was just below that transition level we're looking at. 4,300 extremely important. We came right down just above that in the afternoon session and then moved just off of it just slightly. We're up slightly in pre-market, but again, that 4,300 heading in today will be extremely important. To the upside, we'll be watching that 43.25. That's the bottom of that transition range. If we have any opportunity to move up to the upside, we need to at least clear 43.25. Again, wide transition range, so we could see some choppiness through here, some increased volatility around this area. 43.70 would be important for the bulls to take back, but the bears would like to keep us under that level. Again, in the money now, the money put dominated, so really heading into today with little lean, obviously towards the bearish side, and with the tick structure we had yesterday. To the downside, we see 4,300, as I already said, and then below that, some weakness down to this quarter level at 42.75. Make sure you keep that level in mind as we go ahead and go through the charts. That will be important and obvious as we move through. And then below 42.75, 42.50. We do see the 4,200 down here looming. We've seen the targeting pick up on those puts down to that level also. Not expecting that to happen today or tomorrow, but just make sure you keep that in mind. That could be an area that we travel down towards too if we see significant weakness and increase in the out of the money put speculation down here below us, replacing any of these calls that have been in the money here. Here is the SPX into Friday combo with the OPEX here. Again, same transition area you noticed on the previous chart, 43.25 up to 43.70. So again, living in this range into Friday is a highly probable event, all the way up to 43.50 where we rejected yesterday multiple times and then saw that increased selling come in. You'll notice the total OI there and the negative net delta. So 4,300 again, extremely large level down below us. You will see some in the money calls here, but not a significant amount as the net GEX drops off pretty significantly below that 42.75, which is that quarter level, and then down to 42.50, whereas the in the money calls are located there. So we'll have to watch this throughout the day into Friday. If we see the erosion of these in-the-money calls and mechanical closing and out-of-the-money put speculators really start to fill this in, then we could anticipate some more weakness. Obviously, to the upside, we could move up towards this 43.50 level. I'd anticipate some stalling around there. Again, above 43.50, we could move up to the 43.70 level, and then we'd have a large level really to overcome and absorb to move up to the upside. Here is the SPXP plus 1 DT, so it's tomorrow, referencing the total OI, so it's significant there on the expiry into tomorrow. Monthly OPEX, again, transition, you'll notice that bottom is the 43.25. We've brought the top down slightly to that 43.50, so again, that's why I keep referencing those levels. Moving above those and holding would be a first step for the bulls to the upside. We need to see a mechanical closing of these in-the-money puts. Again, we do have put dominated, but we do have some in-the-money calls below us. but the amount of net GEX and OI is significantly reduced, so not as extreme supportive. 4,300 again to the downside, very important there as we watch that through today and through to OPEX. SPX 0DTE, again, kind of same transition, 43.25 up to that 43.50. So again, extremely important range as we traverse today. We'll watch through this and see if we see any changes. Put dominated above and below spot price, 300,000 for the total OI today. So not an insignificant event heading into today. Again, slight in the money calls below us. You see the deltas drop off pretty significantly below that 42.75. So anticipation of going below that 42.75 down to 42.50 is a possibility, but we need to see some targeting, an increase in that OI and out of the money put speculation there on the vol U, vol D command. So we'll watch that throughout the day. Members can go ahead and run that and make sure you're keeping an eye on that as we go through the day. Here's the SPXA. Paul's laid it out in the commentary extremely well about what's happening with expiry and roll that's possible with these contracts. Again, 4,300 to the downside is extremely important. 42.50, as we've already noted, and then 4,200. Very large transition area, but the 43.25 we keep referencing on the bottom there is really confluence across all expiries that we've been talking about, and then 43.50 overhead. So we'll keep those levels in mind as we head into today's price action. Here is a +1D or SPXA, the monthly expiry heading into tomorrow. So again, keep that for reference. Paul did a great job on the commentary and laid it out. Make sure you're reading that in the SPX PBI BMO channel. Here is balance of next week. Again, put dominated above and below spot price. Again, significant out of the money put speculation that continues to increase to the downside. Make sure we're keeping an eye on this. Again, could embolden the bears if we get below 4,300. First stop would be 42.75 and then 42.50. To the upside, there's really not much to speak of on the out of the money call speculation, so moving to the upside will be extremely difficult. Above 43.50, I would be looking at that 43.70 as we discussed, that transition area. Really not anticipating anything above 43.70. If we do, we'd have to have a market structure and sentiment change, and we'd see that on the vol U, vol D command as well as our web app. So keep that in mind as we head into today. Here is the landscape view heading into Friday. OPEX, again, notice pretty significant out of the money put speculation. 4,300 drops off there, but we do have 42.50 down here and 42.75. So we'll keep an eye on those levels to the downside. Again, SPX for Friday, just put dominated 3 million contracts heading into that expiry combo complex. Again, 4,300, 42.75, and 42.50 to the downside. We'll go ahead and take a look at the tick. Yesterday, we identified very early on after the open that our filter tick was below zero. We were starting to fail very quickly the first moving average, then into almost the 10 o'clock opening range clearing. We had already failed the second moving average. I was discussing in voice chat that I would not be looking for longs. I'd be very defensive and possibly looking for the short side, short deltas. And again, we completely failed and moved to the downside very rapidly, and then the selling started to increase really into the noon hour and then picked up really into the afternoon. So make sure you're watching this at the open. Where we start at with the filter tick will be important, and then if we go above and below zero, new lows still outpacing new highs. ARCX, again, we talk about the colored ribbon. We fail right there at the bottom of the colored ribbon. Again, prone to failures we've discussed multiple times on open mic and with all of our commentary. So at least we'd need to see this start to consolidate, flatten out, and take back the first moving average, and then obviously start changing the slope to the upside if we're looking for anything on the long side in the market. We'll go ahead and take a look at the pre-market price action. We opened at COTMP on SPY. This is a very likely area where you'd anticipate monetization of out of the money puts. Out of the money puts go in the money. Doesn't really have to go below COTMP. It can, but just reaching this level, if you're directionally with those puts, then obviously you see monetization, which is pretty much what we saw already this morning. And we're back up here to 431 area from yesterday. The green dotted line's pre-market high. That'll keep moving up. So heading into today, how I would play the SPY is, obviously we have an important level of support and or important level of supply and demand that's really been bouncing back and forth 432 in trans is going to be extremely important to get over. Any rejection into that level, I would continue to look to short the market. Above 432, we're kind of going to be in this choppy range here all the way back up to 434, and then we see zero gex up here at 436. This is obviously the 5 p.m. run. Down here we have NGEX or negative gex below us at 425. So any move down into that level, I'd look for kind of some stalling action. COTM is right here. COTMP is right here at 428. So really we're going to just see how the opening range plays out. 432 again on the upside is going to be extremely important. If we get a quick rejection off of that, may look to short on down depending on what the tick looks like. SPX, again, I'll be looking at that 43.50 overhead, extremely important. Really this range from this 43.30 all the way up to 43.50, and then 43.25 will be important to get over depending on where we open at. Obviously this will, zero DT will be able to watch with the web app, and then commands in the Discord. Make sure you're looking at that right at the open. When COTMP and negative gex are matching right about 4,300, that becomes an important level to the downside. Obviously we saw that yesterday. I'm not anticipating us to have any major weakness below 4,300 unless we see a significant targeting, as 42.75 really was that downside. So again, we might have some supportive type action into 4,300 again, move back up off of that, opportunistic puts taking some profits into that level. So we'll see how that plays out. That's all I have this morning. Hope that helps everybody. We'll be in the Discord in just a few minutes. Takeaway for today is be cautionary. Tick is extremely down. We have a ton of technical term in the money and out of the money puts above and below us. We'll see how that is navigated. The demand below us on the in the money calls is weak, so we could see some more weakness to the downside. Really, we'll see how that plays out throughout the day. Vol M command has been distributed and pushed to the members. If you were not on open mic last night, make sure you check that out in the hashtag media section, understanding what that chart's telling us. I encourage everybody to run and use that great new tool that we've launched. And then I'll draw your attention to the garbage disposal. Taylor has posted that he is at LAX today or around the area. If we have any members that are around the area, Taylor would be happy to try to meet you depending on what the scheduling is and time frame. So make sure you reach out to him. That's it for today. If anybody needs anything, let us know. We'll be in the Discord in a few minutes. Thanks.